You keep losing money in the stock market because you're playing a rigged game by their rules. The only way you make money in the stock market is by taking on risk that institutions aren't allowed to. Most funds have it written in their mandates and charters that they're not allowed to target speculative stocks. That's where the opportunity resides for you. This scanner returns the best swing trade setups I've ever seen, and it does so by targeting those speculative names. And this is the entire scanner. I don't want to spend 10 minutes in this video building out the scanner step by step. What I really want to do is hop straight into the results because I think there's some amazing swing trade setups going on right now. Anyway, let's quickly cover what we're looking at here. I have the close set to a minimum of $1, and I have a custom study filter set up so that yesterday's volume must be greater than 1 million shares traded on the day. Those two are just to sort of keep a lot of the riffraff out, keep a lot of the crap stocks that you're never going to want to trade out of a scanner. I run these types of scans on almost every scanner that I set up. Now, the two fundamental filters, those are the meat and potatoes of this speculative swing trade stock scanner. The first is the price to earnings ratio, and I have the price to earnings ratio set to a minimum of 100. So only show me stocks on this scanner that are trading at least 100 times earnings. A lot of beginner traders out there are going to hear that and be like, what in the world, Trey? You're just looking at super overvalued stocks, overvalued. Remember, the whole point of this scanner is to target the kind of stocks that the institutions aren't looking to buy. That's where the opportunity exists for retail traders. And I know that sounds crazy right now, but as we jump into these results, as we begin to look at the numbers behind the names, it's going to look a lot better. That I promise you. Next, the sales per share, and I have it set up for the year-over-year percentage change on the sales per share as a minimum of 0%. Only show me stocks where the sales per share is increasing year over year. Just before we run this scanner, I need to let you know that if you are interested in custom ThinkorSwim scanners like this scanner, alongside over 150 other custom ThinkorSwim coded scanners, studies, even trading strategies, etc., are all available on my website, daytradingstrategies.net. The link will be in the description down below. And right now, you can even go check out and import some free codes. So at least click on the link and go take advantage of that. Now, the moment you've been waiting for, let's go ahead and run this scanner and let's begin to do some analysis on these names. You'll notice immediately you're going to see some names you recognize at the top, like Tesla and Palantir. Next, what I want you to do is hop on over to the free website macrotrends.net. I'm in no way affiliated with this website. I don't know who runs it, anything like that. I just love the data provided by it. And I want you to type in the names of the stocks you see on your scanner. So for us, let's go with Palantir. You can click on any of the results. That's going to bring you to this list of fundamental data about the name. The first place we're going to go is into price ratios. And of course, we want to take a look at the PE ratio. If we come down to Palantir, this gives us just a great picture of course, the stock price, the earnings per share over time, and the price to earnings ratio over time. I want you to take a look at where Palantir first broke above 100 on its PE ratio. It was in September of 2023, and at the time, the stock was trading at $16 a share. Oh, Trey, it's got a price to earnings ratio of 229. Who the hell would ever buy that? It's super overvalued, right? Well, of course, as you probably know, Palantir has gone from $16 quarter over quarter, just increasing, and now trading over $125 a share. Just an insane move off of an overvalued speculative name. Of course, also returned on the scanner was Tesla. So if I look up the Tesla ticker on this search bar here and hop over into Tesla's PE ratio, let's take a look at when the first time Tesla broke above a 100 price to earnings ratio was. It was in June of 2020, and at the time, Tesla was trading at $72 a share. As you all probably know, since then, Tesla has been a rocket, trading up to over 350, up over 400. It's currently back testing 350 again. Once again, it would have first appeared on the scanner that we have built in June of 2020 as the price to earnings ratio was over 100 at $72 a share. So are you starting to see the power of speculation? Let me explain what exactly we're doing here in plain English, and then we're going to make a further upgrade to the scanner to make it even better. So the central idea here, why I first built this scanner, is I want to be going with the market. I want to be agreeing with what the market is saying. And nowadays, especially, the market is hyper efficient. It is very, very good at achieving its goal, which is to price in the future value of companies. So more often than not, when a company has a very high price to earnings multiple, it means that the market is assuming that the earnings of this company are going to rapidly increase. And once again, it's more often right than wrong, and that's exactly what you should be targeting as an active trader. Let's once again hop back into the Tesla PE chart here on macrotrends.net to visualize this explanation. At some point, Tesla is trading at an 1100 PE ratio. It is trading 1100 times higher than its earnings. Basically, every retail trader looks at this and is like, what the hell is going on? Who would ever buy this company? But then look at what happens to the earnings over the next 2+ years. The earnings begin skyrocketing. The market was correct. Let's go ahead and take a look at Nvidia as well. This stock isn't even on our scanner right now because the PE ratio isn't that high, but it was at one point, and I vividly remember this. I vividly remember in 2022, early 2022, when Nvidia begins spiking, everyone's like, oh my God, who's buying this stock? It's super overvalued. It's got a PE ratio of 147, trading 147 times earnings. That sounds ridiculous. I get why beginner traders, should I say, don't want to buy that. It sounds nuts. But once again, what's the purpose of this? We are assuming that the market is right, that earnings are going to begin flying. And on Nvidia's case as well, just like Tesla, earnings, in fact, did begin absolutely flying on this name. Now let's go ahead and build the upgrade to this scanner to make it even better, to return even better swing trading setups. To do that, we're going to stay on the Nvidia page on macrotrends.net, but I'm going to hop on over into the price to sales ratio rather than the price to earnings ratio, because on this screen, this middle chart switches to the trailing 12 months sales per share. This is, of course, something that we scan for as well. I want to see year over year sales per share increasing on any stock that is appearing on our scanner. That gives some more validity to the ridiculously high price to earnings ratio, right? That gives some, hey, this thing isn't just randomly overvalued. Its sales per share is actually increasing as well. Well, the next step that I want to take on our scanner is I want to sort the stocks top down by the stocks that have the highest sales per share. Those are going to give you typically the most valid companies that are likely to continue their follow through of their current high growth expectations. So back in our ThinkorSwim scanner here, I'm going to click on this tiny cog icon to the far right of our headers columns, and I'm going to click into customize. And from here, I can look up a column called sales per share. Double click on it so that it is added to our list. I'll also, while I'm here, turn on the price to earnings ratio column just so we can have a visual of that as well on our scan results. Go ahead and obviously add these two to your list. Go ahead and scroll these things out so you can actually see them. And now we can sort top down ascending by sales per share. So we can now see the companies, of course, that are trading over 100 times their earnings and have an increasing year over year sales per share. We can see which one of those are actually making the most money per share now being returned at the top. We now have QRVO, we have PEN, etc., etc. Let's begin to analyze some of these names. So we are now on the PE ratio page on Macro Trends for QRVO. Let's go ahead and scroll down. And this one's not like quite as pretty. They're not all going to be beautiful. We did have a very strong sort of earnings pop for a while here, then it all sort of faded away. But now as the earnings are going back positive, the PE ratio is in fact back above 100. We can look back and point back to a similar situation on this company a while ago, back in 2017, when it reported positive earnings, thus got a very high price to earnings ratio of 317, did so again in late 2018, got a PE ratio back over 100, and then guess what? By 2020, 2019, 2021, this company did begin experiencing very large earnings growth, and of course the stock price went from where it would have first been on the scanner at $60 a share up over $195 a share. Very, very nice move. Once again, that would have been found on this scanner. Is that going to happen again? There's no guarantees. Please, whenever I'm building scanners, whenever I'm doing analysis like this, I'm not saying that because a stock has a high price to earnings ratio, the earnings are definitely going to explode. Unfortunately, there's no such things as guarantees in the stock market, but putting yourself on the side of the market, once again, agreeing with the ratios being provided to you by the market, is putting yourself in the best situation possible. I also want to hop over and look at the price to sales ratio of this stock, just so you can see it is in fact making a lot of money per share. And that sales per share ratio is beginning to bounce again as well. So that is something interesting to keep an eye on. The next stock that was on our scanner sorted top down by sales per share was PEN. Let's go ahead and take a look at PEN. This thing has just been a little all over the place on its earnings per share, but I mean, its first time being over 100 on the PE ratio was even way back in 2016. It had a greater than 100 PE ratio. At the time, the stock was trading at $63 a share. Nowadays, it's trading at $275 a share. This pretty much whole time has been a very strong stock, and the earnings have been up and down, up and down. It seems like, I'm not even sure what this company is, but it might be more of a cyclical type company. But when it's reporting positive earnings and when it does have a PE ratio, it tends to be over 100. And the stock has pretty much always been a very nice hold. Now back within our scan results here, let's pull a couple more names we recognize and continue to do that further analysis. If that gives you a better idea of exactly how I pick which one of these stock setups are good for entrances. I see Workday, I see Shake Shack, and I see DoorDash. So back in macro trends, we can go take a look at Workday. Coming down, we can see that this thing just had a spike above 100 PE ratio, actually an 880 PE ratio when it was trading at $211 a share. It then had its most recent spike above the PE ratio in January when it got to 134 and the stock was trading at $262 a share. It is now trading at $274 a share. Looks to be a really nice increase on the back end of those PE spikes. The next stock on the list that we're going to look at right now is Shake Shack. Coming down, we can see that Shake Shack got its most recent spike above the 100 PE ratio number in September of 2023. At the time was trading at $58 a share. It has since then been over 100 on the PE ratio, and the stock has jumped all the way up to nearly $130 a share. Would have made for an absolutely beautiful swing trade stock. The third and final one we're going to look at for right now is DoorDash. This thing just recently got into profitability. Of course, if the company doesn't make money, it can't have a PE ratio. If you're wondering why the PE ratio is 0 a lot of the times, if it's not making money, you can't divide by 0, right? Just began making money, so its initial PE ratio is 578 times earnings. Ridiculously high, right? But at the time when those numbers were reported, the stock was trading at $167 a share. Just 1 quarter later, the stock is up nearly 30%, now at $197 a share. Once again, made a very nice swing trade opportunity from the first time that PE ratio crossed above 100. So do this, guys. Import this scanner from my website or just go and build it yourself and plug the results into the macro trend PE page like I'm doing. You're going to struggle to find cases in which the price to earnings ratio crosses above 100 and then the stock price comes down. Now, there is going to be case. Someone's going to comment on this video right now and be like, Trey, what about? Yes, there is going to be cases it happens. Once again, there's no such thing as a guarantee in the stock market, but you have a much higher likelihood of when a stock gets into that 100 PE ratio range of the stock price then increasing from there. And if you can target high win rate situations like that, you're putting yourself in the best position possible to make money trading stocks. I hope you all are able to utilize this scanner to find the next Palantir to get yourself in some great swing trading opportunities. Once again, if you're interested in directly importing this scanner, it's available on my website, daytradingstrategies.net, alongside 150 plus other custom ThinkorSwim codes. And remember, I even have some free ones out there. So at least go click on the link in the description down below. Take advantage of those free codes. Then if you like what you see out of those and would like to download, once again, over 150 more, feel free to sign up to the website. Once you sign up, you get access to all the code. It's not like I hide anymore behind another paywall or anything like that. You'll get access to everything. If you did learn something in today's video, please take the half second, hit the like button. If you would like to continue learning, make sure you subscribe to the YouTube channel down below. It's completely free. Why not do it? And with all that being said, I'm going to go ahead and sign out of today's video, and I'll catch you all in the next one.